the Start Your Own Business podcast. Hear inspiring startup stories and get reliable expert advice on how to start your business and get off to the best possible start. Brought to you by Startup Donut, helping small businesses succeed.
Hi there, thanks for joining us and welcome to the Start Your Own Business podcast. My name's Fiona and I'm your host. You're listening to episode 4, the final instalment of our special 4-part mini-series brought to you in association with TaxAssist accountants, all about making tax digital for income tax. The phased introduction of making tax digital for income tax begins on the 6th of April 2026. From that date, around 780,000 sole traders and small private landlords will be legally required to keep digital financial records and submit regular summaries to HMRC, all to help calculate their tax bills more accurately. But this is just the beginning. Further phases are set to roll out in April 2027 and 2028, eventually requiring millions of sole traders and landlords to comply with the new rules. Making tax digital is one of the biggest changes to the UK tax system in decades, and compliance is not optional. Yet despite its importance, awareness remains low. Many sole traders and landlords still haven't heard of it, and even among those who have, misinformation and confusion are widespread. So, in this episode, we're here to set the record straight. Joining us is Helen Wood, tax expert and content writer at TaxAssist Accountants, the sponsor of this podcast. Before we hear from Helen, let's take a moment to learn how TaxAssist Accountants can help you prepare for making tax digital.
Are you a sole trader or landlord earning over £50,000 a year? Then Making Tax Digital for Income Tax is heading your way, and the deadline is the 6th of April 2026. Don't wait until the last minute. TaxAssist Accountants are here to help you get ahead and stay compliant. With local offices across the UK, they offer face-to-face personalised support to guide you through the entire process, whether it's understanding what MTD means for you, getting your finances in order, or choosing the right tools. With MTD compliant software to digitise your records and make submissions simple, you'll be fully set up and ready. Even better, TaxAssist has a range of packages designed to suit different needs and budgets, so you'll only pay for the support that's right for you. It's expert help made local and personal.
It's now time to meet our guest, Helen Wood. Hi there, Helen. Thanks for joining us.
Hi, Fiona. Thanks very much for having me.
So for anyone who might not have caught the other episodes in this series, I wondered if you would mind starting by explaining briefly what making tax digital for income tax is.
Yeah, absolutely. So making tax digital, which I'll probably call MTD some of the time just to avoid saying so many words, it's a change in the way that taxpayers are going to need to deal with their records and the way that they report their income tax and their earnings. And if anybody is already somebody who's VAT registered with their business, they'll be familiar with making tax digital for VAT. But
Right.
this change now with making tax digital for income tax is going to affect sole traders and landlords. And initially it'll be sole traders and landlords with income over a specific amount. But the intention is that eventually everybody in those categories will be involved, and it means that you would keep your bookkeeping records essentially digitally rather than having any paper records or spreadsheets, and that those digital records will talk to HMRC, so that HMRC have information flowing to them throughout the year. And the intention is that it should make your tax return easier in the end because HMRC have that information throughout the year.
So whenever things change, you always get a host of misinformation and rumours that go around. I've heard, he's heard, they said, those kinds of things. And that's true to be said of making tax digital for income tax as well. I've heard some crazy things going around. So the point of today's episode is to try and dispel some of those myths. And I suppose the biggest one is that the introduction of making tax digital for income tax will mean the end of the self-assessment tax return. So what's your response to that rumour?
That's not actually true at the moment, and not in the near future. So the way that making tax digital for income tax is going to be brought in is that from April next year, sole traders or landlords with income of more than £50,000 will be brought into making tax digital. And then the following year, 2027, it'll be taxpayers with £30,000 or more qualifying income, and then £20,000 the year after. Now that leaves at the moment any taxpayers with less than £20,000 of qualifying income, but also quite a few categories of other people who currently do self-assessment tax returns. So trustees of trusts, and people who are partners in partnerships, and quite a few smaller categories of people as well. And HMRC also recognises that some people are digitally excluded and won't be able to use making tax digital at the moment, and so they will be making provisions for those people as well. So at the moment, no, absolutely, self-assessment will still be a thing for everybody who's outside of making tax digital for now.
So you've mentioned some excluded categories there. Do you think that's where the source of the second rumour is that I wanted to address with you, that making tax digital will be optional for some people?
So it is something that I think quite a number of people think, that they might just be able to kind of carry on doing what they're doing at the moment, and that's not true. If people fall into the category that qualifies for making tax digital, then unless they have an exemption, they must go into the making tax digital system. So exemptions are available for digitally excluded people, but that needs to be agreed with HMRC. So that might be people who have a disability that means that they can't use the digital software for some reason, or various other reasons. But no, if you are within the category for making tax digital, so if you have qualifying income above that threshold, then you must swap into making tax digital, rather than just, say, filing a paper tax return, if that's what you do at the moment. So no, it's not an optional system.
So would your advice be there for people to check whether they meet one of the exemptions beforehand?
Absolutely, yes. There's lots of information available on HMRC's website, and indeed on TaxAssist's website. There's a number of kind of articles and Q&As that cover this. But yeah, absolutely. And if they're not sure, to call either HMRC or probably easier, call your accountant and find out if you do qualify for one of those exemptions ahead of time. But also have a look at what the categories of qualifying income are, because that's also important as well, to assess whether you think you're going to come into the category of the £50,000 of qualifying income that'll start from April, and understand what counts in that category, and know what to expect.
So you've mentioned that people are going to have to keep digital records and report their information online to HMRC. Another thing that I've heard is that, it's okay, my paper records that I keep at the moment comply, and I'll be able to carry on using, manual records. Is that true?
Afraid not. No, it does need to be digital records. So there are going to be, there's already a number of software, compatible software available on the market. And there are also things like bridging solutions. So that means if you had, say, some good spreadsheet systems set up that work well, those spreadsheets wouldn't necessarily talk to the HMRC system, but you can get software solutions that would bridge your spreadsheets to HMRC's system, and allow them to talk to HMRC's system and work. But no, paper solutions won't work for this purpose, because there are 4 quarterly returns that need to be made, that are just a press of a button to make make your records uploaded to HMRC's system, and you just can't do that with paper records.
Another thing that I've heard is that people are assuming that HMRC are going to be providing software rather than having to go out and find their own accounting software solution. What about that? Is that true? Are HMRC doing anything to support people in the transition to MTD?
So HMRC would definitely say they are doing things to support people, but providing free software is not one of those things. Unfortunately, they've very specifically said they won't be providing software, and it will be something to look to the market to do. And the market has come back with a number of solutions. There are some free software solutions available, but there are a lot of very good sort of pay for software solutions available now, and those are already available, and HMRC's website does state the solutions that are compatible with their systems.
Okay, so if you don't have software already, you're not already using an accounting software solution for your business, and you need to go out, you can go to the HMRC website to find a list of compliance software, I assume?
Yeah, that's right. And they do update that quite frequently as well, so that it has those solutions on there. But if you do already use software for your accounting, it may already be sufficient to use Making Tax Digital, or it may just need a small upgrade. So if you're already using software, you may be pleasantly surprised that you don't need to make very many changes.
Yeah, so a piece of advice there, I suppose, either way, whether you're already using solutions or you're looking for one for the first time, is check HMRC's list, and you can make sure then that you're finding one that meets the new requirements.
Absolutely, yeah. And also talk to your accountant if you already have one, because I know certainly TaxAssist have a number of software providers that we work with, and can look at those solutions and see what might work best for you.
So what would you say to someone who's not already using accounting software, who feels like actually it's all going to be a whole load of new bother and extra hassle for them when they're running their business, having to move to a digital system?
So I think if you're not using any software at all at the moment, then yes, it is going to be a bit of a change to start with, and we absolutely understand that. And I think it's good to get looking at those solutions now and talk to advisors who can help and talk you through them. And lots of accountants will be able to give you some training on those software solutions and talk you through how to do them. And although I think it can sound quite scary if you've been doing everything just with paper receipts and paper books, actually once you get going, it becomes a lot of things that you maybe take you quite a bit of time at the end of the month or at year end will become automated and actually free up quite a bit of your time.
Right.
So although there may be that time right at the beginning in understanding those systems and potentially making a bit of an investment into that software that you didn't have before, actually it could really help free up your time in the long run.
Yeah. And I suppose the other thing as well is that there's less risk of making mistakes as well if you're using accounting because it's doing calculations for you.
Absolutely that, yeah, and things like a lot of the kind of software solutions will have things that you can just snap a picture of your receipts, and then you don't have to keep big boxes of all your receipts throughout the year, and they'll upload them for you and just and sort those receipts for you, so you've got them all there, and they've got the your dates on and everything, and they'll pull those dates from those photos, and it's just a lot quicker than kind of dumping a bag of receipts on your accountant's desk at year end.
Who, me? Yeah, so actually that's, the whole idea of it being an extra hassle is not strictly true at all, because once you've gone through that initial learning curve and setting your systems up, that there are, quite considerable time savings that could be made in terms of how long it takes you to file everything.
Absolutely, yeah. And the intention is with these 4 quarterly returns that Making Tax Digital system will have, that the information that pulls through at the press of the button in the accounting software each quarter will pre-populate the tax return at the end of the year. So actually the end of year tax return with Making Tax Digital should be quicker and easier than a self-assessment tax return would have been, because it's pre-populated some of that information for you.
So the quarterly returns then are not really like a full self-assessment. So anyone who might be worried that, oh crikey, I've now got to do 4 returns a year, that's not true either.
No, yeah, thankfully that is absolutely not the case. No, they pull the information that's already on the system through and send that to HMRC. So it's not a case of having to look at whether deductions are available or any relief should be claimed each time. It's simply your accounting records, your business records are just uploaded as they are. So there's not, lots of calculations and things to be done each quarter. It is just pulling that sort of the raw headline figures essentially.
So are we talking about income and expenses there, Helen?
Yes, essentially we are. It's not going to be uploading every individual receipt you've logged or anything like that. It's those headline figures,
Top line figures.
Through. Yeah.
So another thing, and you have sort of briefly covered this, is that making tax digital, people are worried that they're going to fall under making tax digital from day one, and that's not true either, is it?
No, not necessarily at all. So from April 2026, so we're talking next year, it is people with qualifying income over £50,000, and that's, as I said earlier, that's sole traders and landlords.
Right.
And then the following April, it's people over £30,000 of qualifying income, and then over 20,000 from April 28. And we don't have the dates yet for anybody who's either below £20,000 of qualifying income or the other categories, such as partners in partnerships and trustees who don't yet have those dates. But yeah, that's what we have at the moment, and we're just waiting to find out about those other categories.
Yeah, and to be clear, that's income, not profit.
Absolutely. So that could mean it could be somebody loss making. So even if you have income over those thresholds, even if you have so many costs that at the moment you have in a loss making year, don't think that you fall outside of that. You need to be super careful that you're talking about income and not profit.
So what have you got to say to those who claim that making tax digital is going to make the whole self-assessment process more expensive for businesses?
So I can see where that thought might come from, because every time there's a change and potentially more software or new systems need bringing in, that's an obvious fear that people might have. But I think, as I sort of alluded to earlier, with the fear about having new software systems at all, in the long run, it should make things easier and quicker, because once those systems, you've got used to them, and you can just log receipts quickly. If you haven't had an accounting solution for things like receipts before, it should take lots of time away from having to sort of compile those things at month and year end. So long term it should be much quicker, and you're not having to move things from your paper systems into your tax return at the end of the year. It's all kind of pulling together for you. So it should be quicker in the long term. Absolutely. In fact, in the medium term, really, just as soon as you've bedded in with the systems.
And I think the other thing as well is that for those who don't have accounting software at the moment, there's the fear that there's going to be some massive outlay. But actually, most accounting softwares these days are on kind of monthly rolling subscription basis. And they're not a great deal of money, are they?
No, there's very few solutions, and certainly the solutions that TaxAssist works with, it's a monthly fee that would be involved there. And so if you're already using accountants, it's something you would discuss, like how that would change your existing fee setup. But it isn't going to be like buying a new computer would be, or any kind of big. It's not kind of a big capital outlay or anything like that. It is something that would be structured to use throughout the year, and it would be a monthly fee throughout the year. And if you're already using accounting software, it may just be a slight upgrade to that, and it may not even feel very different, and it shouldn't cost you a huge amount more now.
Yeah. Another thing that I've heard is that having to submit 4 times a year is going to make everything more complicated. What's your response to that rumour?
Yeah, that shouldn't be the case at all, because it is just a press of a button at those quarters. And if you are already VAT registered, it will just be an extra button essentially to press,
Right.
because you're already, as a VAT registered business, you're already having to do quarterly making tax digital returns for VAT, and this would just be another part of your system. There would be a button pressed on. So no, it shouldn't make things more complicated. It should just upload what you've already been recording throughout the 3 months.
So another one that I've sort of heard quite a lot is like, oh, it's okay, it's not till April next year. I don't need to worry yet. What would your response be to that? What would you say to that rumour?
I would say that if you do wait till April next year and then realise that you are over the qualifying income, I think it would be quite stressful if you leave it actually to April. It would be much better to start having a look now at what solutions you could have and what changes you might need to make, so that you don't get a surprise if you do qualify in April, because you're going to need to start making those changes to your business records if they are required right from the beginning of the tax year, to make sure that you're making those returns, those quarterly returns from as soon as the tax year starts. So I would definitely suggest having a look ahead of time and feeling confident about whether you need to use Making Tax Digital from April, or whether you might fall into one of the later years starting points. HMRC will write to taxpayers who qualify based on their income for the current year, but it's always good to get ahead, really, if you can, and just make those estimates yourself based on your business information.
And I suppose for anyone who has, under the current self-assessment scheme, left it till the last few days in January before they start pulling all their paperwork together, that is quite stressful. It's more likely you'll make mistakes. It's more likely your accountant's already busy doing, paperwork for other people that they're working with, which means that you might miss the deadline completely. And then you've got the whole risk then of missing the filing deadline, paying late and incurring penalties. So yes, although it feels like April's still a long way off, it's worth sort of making preparations now if you think you're likely to fall under Making Tax Digital from April. And if only because it gives you time to learn how to use the new software if you've not used it before. It gives you a chance to kind of get over those stumbling blocks and those initial, well, what box do I put that in? How do I categorise that expense? It gives you time to get used to that before it's imperative that you're using the software.
Yeah, 100%. Anything that means that you can get used to doing things before you actually have to, and they matter, is great. And actually, you can voluntarily start early with Making Tax Digital if people want to. They can register voluntarily now, even if they are not going to be within that category that qualifies from April. If people want to just kind of get practicing with it, that's absolutely fine as well. They can do that. But yeah, as I say, the actual mandatory thresholds will start from April next year.
So another thing, I was having a chat with someone the other day over coffee, and they were saying, oh, well, it doesn't matter, doesn't apply to me. I'm only a small private landlord. I don't have to worry. That's not true either, is it?
No, and we see this a lot in that some private landlords, they don't really think of themselves as a business. They just think of, I've got a couple of properties and it's something I do on the side, essentially. I just, I let those properties out. But for the purposes of Making Tax Digital, that absolutely is a property business, and they do need to look at whether they have qualifying income that's going to hit one of those three thresholds over the next 3 years. And if they're not sure about that, definitely talk to their accountant and see what their qualifying income is going to be and is likely to be, because it is a tricky one, because I know that lots of landlords, it isn't their whole sort of job. It's just their sort of side job, and they don't think of it like a business, but HMRC do for these purposes.
Yeah, so people who are, both employees and have a property on the side or a side
Yes.
hustle on the side, you might be, coming under self-assessment for other reasons. So, yeah.
Yes, absolutely.
So another thing that some people are worried about is the fact that they're making quarterly updates will mean that they're also making quarterly payments to HMRC. Is that true?
Yeah, that's a great question. And no, that isn't true. The tax will still need to be paid by the 31st of January. So the quarterly updates are just information flows from the business records to
Right.
HMRC, but the tax payment dates will remain the same. So the 31st of January being the main one. And then if the taxpayer is making payments on account currently, that would still happen. So that would be the 31st of July and the 31st of January dates would stay the same.
Okay, so there's no changes to the payment date, and there's no change to the date when you make your final sort of self-assessment, final return.
Correct.
That date,
Yeah,
those dates
absolutely.
are remaining the same.
Yeah, so the self-assessment return for people within Making Tax Digital becomes a Making Tax Digital tax return, and that is also a 31st of January deadline in the same way as self-assessment was.
So those key dates, no changes, people.
Absolutely, yeah, no changes to payment or that final tax return.
I wondered if you'd mind, Helen, finishing off with a bit of a summary about how TaxAssist can help people limit the impact of making tax digital if they're worried about what it's going to mean for them.
Absolutely. So I definitely recommend talking to your local TaxAssist accountant if you're concerned at all about making tax digital, or if you just want to talk through when you're likely to qualify, and all of the accounting solutions, the software solutions that we can offer. So we have Xero, QuickBooks, Dext, and those are solutions that lots of our clients are using already, but they are all solutions that can be used for making tax digital. Many of the TaxAssist accountants can walk you through using those systems and offer training on them, and just give reassurance of what making tax digital is going to look like and feel like, and how different, if any, it will be from your current systems. And we've also have a free webinar coming up on making tax digital, and we can put the web address for that in the show notes. And that will just talk you through everything you need to know, really, and any next steps you might want to take to get yourself sorted, really, and feel confident about making tax digital. Can
anybody join that webinar, Helen, or do they need to be an existing client of TaxAssist?
No, anybody can join, and it's free to join, and it's a no obligation webinar. So yeah, you don't have to be an existing client for that. It's free for anybody who's interested.
Perfect. So if you're looking for a bit more help and support on that, then definitely check that out. And as Helen said, we'll put a link to that in the summary notes. Can you tell people, Helen, where we can find TaxAssist online and where people can connect with you and with TaxAssist, please?
Yeah, absolutely. So TaxAssist, it's at taxassist.co.uk, and we have a wealth of information on there in the resources tab about making tax digital and lots of other subjects as well that affect small and medium-sized businesses, landlords, limited companies, all sorts of businesses, really, and kind of news stories about tax and accounting matters that are important.
That's perfect. Thank you so much for your time today, Helen. That's going to be really useful. I know that's definitely going to have dispelled lots of the myths that I've heard people talking about, connected to making tax digital. So hopefully people are clearer on what the truth of the matter is. So thank you for your time today. It's been great to talk to you.
Thanks, Fiona. My pleasure. Thank you.
Whenever things change, the water can get murky with rumour and misinformation. What we do know is making tax digital is coming, and it will mean you'll have to make some changes to how you keep financial records and report taxable income and tax expenses to HMRC. Even if you're not affected from April 2026, it's very likely you will come under the scope of MTD if you're a sole trader or a landlord sooner or later. Hopefully, Helen's dispelled some of the misinformation for you and you feel more confident about your next steps. MTD shouldn't be scary. With the right preparation, software and support, it's not just manageable, it's beneficial. You can find Helen on LinkedIn. We'll share links to Helen and related donut content in the summary notes. And you can also find out more about how TaxAssist friendly local accountants can help you get ready for making tax digital. You'll find the summary notes at www.startyourownbusinesspodcast.co.uk. If you've enjoyed the show, please hit follow. It'll make sure you're notified about other episodes in the series as soon as they drop. All that remains is to thank Helen once again for her time today. Until the next time, all the best.
Are you a sole trader or landlord with combined income over £50,000? Big changes are coming your way. From the 6th of April 2026, making tax digital for income tax becomes mandatory, and getting prepared now is key. That's where TaxAssist accountants come in. They specialise in helping small businesses and landlords like you make the switch smoothly and stress-free. With face-to-face personalised advice, TaxAssist will guide you every step of the way, helping you understand exactly what MTD means for you and your business. They'll also provide MTD-ready software to help digitise your records, making it easy to stay compliant. And with a range of affordable packages tailored to your needs, you can choose the level of support that's right for you. Whether you want full management, a helping hand, or prefer to stay in full control. You can get free advice on MTD and how it may impact you by signing up to TaxAssist's client webinar. You'll receive expert guidance on how to digitise your records and meet your obligations, as well as the opportunity to ask any burning questions. Register for your free webinar place by visiting taxassist.co.uk/resources/news/MTD webinar today.